Good morning, everybody. Uneducated Economist here. So I was reading some articles before I head into work here, and I came across this interview. I think it was on Bloomberg. I'm pretty sure. I'll leave a link down in the description for you guys. And it was with two former Fed officials, Julia Coronado and Simon Potter. And these two have come up with an idea as far as how the Federal Reserve can inject stimulus money into the economy. Now, what I find interesting is that these two are talking about future events. So it's like almost as if UBI is a given, they're just trying to figure out a way to implement it. And of course, they don't call it UBI, and they don't give the real reasons why, the Federal Reserve needs to stimulate the economy. They're just talking about the ways that it can happen. And what they're referring to as far as the bulk of the article, or at least the bulk of the interview, is talking about how the Federal Reserve could buy recession bonds, which I find kind of interesting on its own, just because of the idea that if unemployment rises like 0.5%, then these recession bonds will start to sell. Anyway, I thought it was kind of an interesting concept that they were talking about, but what I found more interesting in it is that the way the money will be distributed once the Federal Reserve purchases these bonds. Because what they're talking about is a digital currency, and that it would be distributed through a app on people's phone or some kind of concept like that. And it just goes to show that central bank digital currency is not something of a myth or a possibility. It's in the works. I mean, it's gonna happen. It's just a matter of time before it takes place. And of course, the real reasons why they want a digital currency, of course, it's like the obvious ones of like, being able to track and trace and tax and do all that other stuff that people are concerned about as far as privacy issues go. But the real reason behind it is that if they can lock it up inside of a digital currency, all the money, they can remove cash out of the system and then be able to take interest rates into negative territory. See, right now, even though there's negative interest rates in the world, in the banking system, negative interest rates really haven't hit depositors' money, like you and me putting our money into the bank and then collecting a negative interest rate on it. That hasn't occurred. And they know that they can't do that because the moment that you start hitting depositors up with a negative interest rate, they're going to pull all the cash out of the system. So instead, what they're going to do is they're going to implement this digital currency. And they're going to start it off with a good thing. We're trying to get it out for stimulus, to try and, get consumption back up and moving again, to try and raise, money velocity. They're going to have all these like great ideas as far as why they're doing it. But the real reason is so that they can take interest rates into negative territory. Because the dropping of interest rates is typically how the Federal Reserve or central banks in general were able to stimulate the economy, and they just don't have any room since they were hitting the lower bound of zero. Anyway, I'll leave a link down in the description for you guys. Love to hear your thoughts on it. Uneducated Economist. You guys let me know.